You know, if you really want to know what's going on inside a company, you follow the money. Not the company's money, but the personal cash of its top executives and directors. So today, we're going to decode the biggest insider bets of the week.
So the big question is, where did the people with the most information, the ultimate insiders, put their own money this past week? Were they buying, selling, or just kind of sitting on the sidelines? Let's dive in and find out. Okay, first things first. Let's be super clear about something. We are talking about legal insider trading. This isn't about some secret tip whispered in a back room. Nope. This is all about public, mandatory filings that give us one of the clearest windows into what corporate leaders are actually thinking. Every single week you get hundreds of these trades, but there are always a few that just pop. They rise to the top. And this week, 3 signals in particular really caught our eye. First up is a signal that we like to call the conviction bet. This is when a single insider makes a huge personal investment, and I mean dramatically increasing their own stake in the company they help run. This week's standout example comes from Fred Cohen. He's a director at Intellia Therapeutics, and he put down a cool $1.4 million of his own money to buy more shares.
And here's the conviction part. That $1.4 million purchase, it wasn't just some small addition to his portfolio. No way. It increased his personal holdings in the company by a staggering 261%. Now that is a loud and clear statement about where he thinks that stock is headed.
Our second signal is what we'll call a cluster bet. And, it's arguably even more powerful. This isn't just one insider acting alone. This is a whole group of them at the same company, all buying stock right around the same time.
The largest cluster buy at an operating company this week was over at Navin, which is a software company. In this case, 4 different insiders all decided to buy in, and that creates a really powerful consensus signal. And the value of that consensus? It's huge. Together, they bought over $67 million worth of their own company stock. I mean, when that many insiders make a coordinated move of that size, you can bet the market is paying attention. All right, our third signal zeroes in on a very specific type of insider, the C-suite. And when the chief financial officer, the person who knows the company's numbers inside and out better than anyone, starts buying up shares, well, that's a signal you really want to pay attention to.
So this week, Nicholas Santoro Jr., the CFO over at Rhythm Perpetual, made a pretty significant purchase of $300,000. A CFO buying shares like that signals some deep confidence in the company's financial health and its future.
Now, these individual stories are fascinating, right? But what do they tell us when we zoom out and look at the bigger picture? Are insiders as a whole feeling more bullish or more bearish right now? Across all the discretionary trades this week, insiders bought and sold a combined total of over $765 million in stock. That's a massive number on its own, but it gets really interesting when we compare it to last week. And here's the kicker. That $765 million represents a 40% jump in trading activity from just 1 week ago. So insiders aren't just dipping their toes in the water. It looks like they're diving in, putting a lot more of their own capital on the line. And the overall sentiment is definitely positive. The buy-to-sell ratio came in at 1.30. So what that means is for every 10 shares insiders sold, they bought 13. But here's an interesting twist. While that's still very positive, that sentiment has actually cooled off a little bit from last week's incredibly bullish 1.69 ratio.
So with a big surge in the total dollars being traded, the next logical question is, which sectors are attracting all this new insider money? And which ones are they maybe moving away from?
Wow, this chart paints a very, very clear picture of where the money is flowing. You've got this huge inflow of cash into financials and miscellaneous sectors. Just look at how many more buyers there are than sellers. But then on the other end of the spectrum, it looks like insiders in healthcare are heading for the exits. This suggests a major rotation of confidence out of that sector, at least for now.
So we've seen the big trends, but what about the biggest individual bets? Let's zoom back in one last time and look at the top 5 largest single purchases of the week. Who was writing the biggest checks? Right at the top of the list, you have a director at Corpay Inc. with the massive $2.5 million purchase. And hey, look who's at number 2, our old friend from the conviction bet, the director at Intellia. You start to notice a pattern here, right? All 5 of the top individual buys this week were made by company directors. So, to
To wrap it all up, let's just boil it down. What are the key signals from this week's insider trading? First, activity surged, with total trading value jumping 40%. Second, group confidence is high, with 43% more cluster buys than we saw last week. And finally, we're seeing this very clear rotation, with money flowing into sectors like financials and out of healthcare.
So all of that leaves us with one final question. With more money in play and insiders moving in these coordinated groups, are we seeing the start of a sustained trend here? Is this a signal of growing confidence in these very specific pockets of the market? Well, that is the million or maybe billion-dollar question.
Just so you know, all of the data you saw today comes from publicly filed SEC forms, and it's compiled by Insider Compass. And as always, please remember, this is for educational purposes only and is not investment advice. Thanks for joining us for this explainer.